Hey folks, today we're going to talk about the Vanguard Trust Services, what they offer as a co-trustee or a successor trustee if you're looking at a firm to help you with your estate planning documents, not to set them up, but to actually manage them in a revocable living trust or an irrevocable trust, which we'll talk about. I thought it'd be interesting to look into this I've been doing a couple of videos on trustee services or trust services and living trust as well. If you see my little bit of darkness going over my face, I got the sun shining right there, the beautiful Georgia fall day, and got the windows open. And so the sun's going behind the trees in my back of my house. It might not be the perfect light, but man, it's just as beautiful out. And I want to get the tea olive leaves, the smell of tea olives, my friends. Nothing's better than that. So let's dive right into this. All right, so this is right off the Vanguard website. And I just want to, I thought it'd be pretty interesting to go over with you because Vanguard is just superior when it comes to the fees they charge for trust. Navy Federal and other mutual companies. So Vanguard is owned by shareholders. Navy Federal is a mutual company. Credit unions are mutual companies. USA is not really a mutual company, but it's the same gist of that. They don't have stockholders. So firms that are mutual companies, and Vanguard is one, I don't even know if it's a mutual company specifically, but it's owned by shareholders. Generally, you get a better bang for your buck with a firm that's a mutual company or a credit union or one that's owned by shareholders as opposed to one that's owned by stockholders. So Vanguard is a company owned by shareholders, thus is going to have just lower fees predominantly across the board. Now, Fidelity, on the other hand, they are owned by the Johnson family, so they would think it'd be cheaper too, but I don't know if they are actually. On the trust side, I just don't know. So when it comes to Vanguard versus Fidelity, I'll take Vanguard 90 times out of 100. All right, so here's what Vanguard says. Let our professional trust services reduce the burden for you and your family. Thank you for your interest in our asset management and trust services. Managing a trust or successfully can be a complex and time-consuming endeavor. If you're concerned about placing this responsibility on a family member or friend, you may be ready for our professional trust services. You can ask us to serve as your sole trustee, your co-trustee, or the investment manager of an already appointed trustee. You can even designate us as successor trustee. We'll get into all this here in just a second. Either way, we're going to administer and manage your assets objectively according to what you've defined in your trust documents, ensure a stable, continuous trust relationships for your beneficiaries, and give you superior service you count on from Vanguard. All right, so let's dive right into this. You got this nice little girl here, young lady, making things easier for your family with our trust services. And you got these happy, parents, who knows. And then don't go down here. More happy people, lots of happy people. All right, let's take the burden off you and your family. Whether you already have a trust or in the process of setting one up, it's important to select the right trustee to oversee it. So remember, I did a video yesterday on the most important person in your estate plan, and that's your trustee. Now, a trustee is only for trust. An executor or executrix is for wills. And that is a person who will actually settle your estate after going through probate. They're the people who are going to make sure the money goes to the right place with the help of the probate court. A trustee, because a trust is not a probated asset, has a lot of just authority there and a lot of burden on him to make sure it's done correctly. So a trustee is a person, not only the person that will actually settle the estate, but the person who could keep the estate, i.e. your assets, growing for many, many years to come, even after your death or incapacity. So you had an executor, executrix on the will side, and a trustee on the trust side. By far and away, a trustee is more important, a lot more burdens, and a lot more going on there because we're talking management after your death for sure. All right, choosing a right trustee is more than picking someone your family's comfortable with or someone who manages their own investment portfolio. A trustee needs to have the knowledge and experience to handle the complexities involved. But also willing to take care of your assets and your beneficiaries in the way you'd want. Serving as a trustee is an important responsibility that should not be taken lightly. It involves many complex tasks and fiduciary responsibilities. Corporate trustees, such as the Vanguard National Trust Company, have the fiduciary experience to administer blah, blah, blah. They remain objective. They don't go on vacation right here. They don't go on vacation, get sick, move, or pass away. They're always there. They can take the burden off of administering a trust off you and your family. They also remain objective while working with the beneficiaries. I'm just telling you. Grandma, I want some money. I need to get money because I want a new boat. Little Johnny, I didn't realize I was going to sign up for this, man. It's 3:00 in the morning. Don't call me again. Grandma, I need the money. And then you're just sitting there thinking, I'd rather jump off a bridge in a swimming pool of hungry sharks than have to deal with Johnny calling me up all the time to get an extra $5,000 from the trust. Vanguard established the Vanguard National Trust Company to offer personal trust and advisory services to our clients. When you appoint Vanguard as trustee, you have a dedicated. All right, we already talked about that. Okay, so let's keep going down. Decide how and when you want us to serve. This is pretty important. We can serve you as trustee now. If you appoint Vanguard as a current trustee, we'll serve as both financial advisor and trust administrator. We can take on the role of either the sole trustee or co-trustee, partnering with the other designated co-trustee. All right, so what happens a lot of times is I have a living trust. I'm the grantor. I'm the person who grants the money to the living trust. I'm usually, if I'm in good health and good mind, I'll be the trustee as well. So what will happen is I want to make sure I name a co-trustee to serve with me. Generally speaking, if I'm naming a corporate trustee, they'll take a back seat. They're not really a successor trustee. They're a co-trustee. They're going to manage the investments. They're going to send the checks. Ultimately, it's my responsibility to determine if I want them to continue to manage the investments, to continue to send the checks. If I want to change the trust as a trustee and the grantor, I can do that. But Vanguard will be there with me just in case I'm incapacitated, just because I don't feel like doing it anymore, just in case I get dead, I die. I have someone already at the realm right there to take over and also to assist me as well. That's a co-trustee. They assist. A lot of times a corporate co-trustee will just serve as the investment manager and with the checks and whatnot that go out if that were to happen while you're alive as the initial trustee. They invest the trust portfolio objectively with the benefits of all interested parties, the beneficiaries, and myself as a grantor and the person who did the trust doc. They manage the portfolio tax efficient and tax effective manner. Remember, as a living trust, it all flows back to your Social Security number anyway. So it's not, you don't want to have unseemly capital gains, but that's not really the trust fault necessarily. That's just because you have some crappy investments, which is why Vanguard would be a good place to park your trust assets, simply because there's going to be less distributions. But that's not just for trust. That's also for individual and joint accounts as well. As trust administrator, we'll also interpret the trust documents, distribute the assets to beneficiaries, address specific beneficiary needs, special needs trusts, whatnot, prepare and file fiduciary tax forms. There really probably shouldn't be any as long as I'm still alive. If it's a living trust, you still need 1099s though, and you'll get that regardless. But still, that's something. Perform principal and income accounting, and that's a big deal. Principal and income accounting is a huge deal that you don't want to be messing with. And I'm not going to dive into what principal and income accounting is here, but I'm telling you, if you think being a trustee on a trust where the grantor is dead is a simple matter, just like managing a mutual fund, you got another thing coming, because the difference between principal and income when it comes to trust documents, think about it. Is it principal or is it income when capital gains are distributed? Is that principal or is income? Does that go back into the reinvesting as a capital gain or dividend? Does that add to the principal or does that add to the income? Does it make a difference? All those things means yes, it is a huge difference. And it needs to be accounted for accordingly, or else the beneficiary could be in real bad shape towards you if you screw that up. We can serve as your financial advisor, essentially managing the investment portfolio. We can also serve as successor trustee. So Josh says, I'm the trustee of my trust. At my demise, at my death, or my incapacity, I name Vanguard as successor trustee to take over the reins when I'm dead or incapacitated. Now, just if you're going to have any corporate trustee, a successor trustee, it's probably a good idea to make sure they understand that they've been named successor trustee. USAA used to have these huge files of all these different successor trustee documents that, man, you're always sitting there, do these people know? Who knows what's going on there? So just look, if you're going to name a successor trustee, make sure you send the trust document to the firm that you're naming as a successor trustee. Make sure they agree that they'll take on the ownership of the successor trustee, and then make sure that you're aware that they are your successor trustee as well. So here's a happy kid. Let's keep going down. Who's on your trust team? If you appointed us as trustee, we need to talk about that. So you have a financial advisor, the person who manages your accounts. You have a CTFA, a certified trust financial advisor, or a CFP. Your trust, just people who can help you manage the trust account. Okay, so exceptional value. So I want to go down here and talk about your costs. So this is what's mind-boggling, how cheap this is. And cheap isn't bad or inexpensive. It doesn't mean cheap. That's probably the better way to put it. Annual trust administration fee is 25 basis points. That's 0.25%, with the annual money management fee, investment management fee, 0.3. So your total fee is 0.55. Now you got to add the mutual funds or the ETFs that they throw in there, probably another 10 basis points. But for $5 million or less on a trust, you're getting basically 60 to 65 bips for your total cost of trust work. That's insane. That's fantastic. And once you break 15 million, which I don't have, but still it's even cheaper. But I mean, literally for setting up and managing the trust and taking all the responsibilities of the trustee and for 55 to 65 basis points, it's insane. And here the example of a $20 million trust. It costs you $52,000 a year. That's just dirt cheap, man. I wanted to point something out here. The minimum account is $500,000 with a minimum trust fee of $3,500. So you just got to keep that in mind. You can't do this for $200,000, which is why if you're naming a successor trustee, and let's just use Vanguard, and you have a trust of $200,000 in it, and you think Vanguard is going to take that trust for $3,500 minimum annual fee, they're not gonna, because that is a violation of fiduciary fee standards. Really, you can make an argument for it, but Vanguard won't touch out the 10-foot pole. USAA won't touch out the 10-foot pole because there's not enough asset in there in which to charge the money. There's just not. So if you're naming a corporate trustee as a successor trustee and your trust count isn't worth all that much, again, less than $250,000 for sure, generally less than $500,000, you might want to think twice about even naming a successor trustee, or frankly, even having a trust. All right, so a couple of things I want to go down here, guys. This is important. Okay. So what happens? You have to have a trust. All right. So you appointing as trustee, Vanguard can accept a trustee appointment or a current as successor. So again, you're naming in your trust document, my co-trustee is Vanguard or USAA or Navy Federal, whoever it is, or my successor trustee is Vanguard or whatever. That's what you got to state that specifically in your trust document. Now they must examine the trust agreement to ensure it contains certain required provisions that otherwise it satisfies their acceptance criteria, i.e. it can't be $100,000. They're just not going to take it. For current trustee requests, where they're acting now, depending on the nature of the trust, we also may need to review the trust tax returns and or account statements. And you think about it like that. If all your trust consists of nothing but 1 million shares of one stock, I don't know, Nike stock, Vanguard's not going to want to touch that with a 10-foot pole. It puts way too much liability on that because their assets are not diversified. And if Nike goes bankrupt, the beneficiary is going to sue Vanguard quicker than you can blink an eye, because they say you violated the fiduciary responsibility of the Prudent Investment Act. And the Prudent Investment Act says you should not have all your eggs in one basket. It's just that simple. Now Vanguard cannot offer you opinion on your legal effect of your trust. Only your personal attorney can do that. That's not just Vanguard. It's any firm that offers trust services. They're not going to offer you a legal opinion on the validity of your trust. They're just going to offer their own legal opinion on whether they can take that trust and then assign themselves as co-trustee or successor trustee. In accordance with federal banking laws, they're authorized to perform fiduciary activities. So trusts fall under banking rules and regulations, believe it or not investment rules and regulations. So trusts are inherently a fiduciary product. And Vanguard does not settle your estate. They don't serve as executor or personal representative to settle your estate at this time. They don't do that. All right, so basically I want to share if Vanguard is serving as successor trustee or the trust is not funded to a future date, we reserve the right to decline the trust. Can't stress that enough. Please contact us how to appoint Vanguard's trustee. But this is what I want to point out right here. Here's the provisions of the trust right here. Administration of non-financial assets. And this is big because a lot of people, like I said, have timber, they have real estate, rental real estate, other property. They just have other assets that are non-financial. Maybe they have oil rights in Texas, you name it. Vanguard shall act primarily as trustee of assets traded on established securities exchange. They shall not accept or be responsible for the administration, disposition, maintenance, or sale of real estate, business assets, tangible personal property, or other non-financial assets. Any trust not accepted by Vanguard shall be administered in a separate share of the trust by the sole discretion of the remaining co-trustees. Or if there's no co-trustee, then serving by a trustee who shall be appointed in the following order. So essentially, and happens all the time. Essentially, what they're saying is we're not going to mess with your real estate, or your timber rights, your oil and gas rights, your mineral rights, your rental real estate. We're not going to mess with that. We will mess with your financial assets as sole or co-trustee or successor trustee. There's other stuff you're going to have to find somebody else. Now, the interesting thing is they're not saying explicitly here, what I thought that was interesting, that they won't be engaged in the financial aspect of the trust. So if you have a living trust, Vanguard can still serve, it seems to me, as trustee of the financial aspects, but they're just pushing off the other stuff for somebody else to manage. So essentially, you'd have two trustees in that regard. You have Vanguard run the financial assets and Joe Real Estate Company running the real estate assets, which is pretty interesting and more complex. No other way around that. But I thought that's pretty important for you to understand about Vanguard. And a lot of firms are like that. They get very, very nervous about managing non-financial properties. And that's where a lot of the trust fees can really be raised significantly if they're managing real estate or mineral rights or timber property or something like that. And that's pretty much it. So Vanguard must satisfy any reporting or accounting requirements set forth in the trust. Again, for the real revocable living trust, not a big deal, generally speaking. I mean, there could be some for sure. That's where you'd want to talk to certainly a CPA and certainly your trust attorney as well. For just a real revocable living trust of $1 million in financial assets, that's not a big deal. If it's an irrevocable trust, it is, because you're going to file 1041, has its own separate tax returns. And if you don't do that, you're wrong. You need to do that for sure. Even if all the money is being distributed, the net income, DNI, distributable net income, even if all the net income is being flown out of the trust and into the beneficiary's hands by the end of the year, you still got to file a tax form, 1041. I can't tell you how many people don't do that because they didn't know, and no one's advising them to do that. That's just the wrong answer. All right. Actions of predecessors, trustees, Vanguard will not assume responsibility of all the errors that previous trustees made. And of course, they have the right to resign. That's for sure. And they're entitled to a fee. So anyway, I thought that's pretty interesting. This is the Vanguard place on the trust services. I'm a big fan of getting a corporate trustee. If you feel you need somebody to administer the trust in your demise or incapacity, I do not like a lot of times having Aunt Bertha or Grandma Jones or something like that as that person, because settling an estate as an executor through probate is a heck of a lot easier than being a trustee on an asset that is going to stay around for many, many years to come, long after you died. It's not something to undertake lightly, my friends, which is why you need a corporate trustee. It's going to be tough to beat Vanguard. Absolutely. In fact, Vanguard even says they'll meet with you face to face. I don't know what they'll do in that regard, but it's going to be tough for a fee perspective to beat Vanguard. So if you're shopping around for a corporate trustee, I would compare Vanguard to anyone. And I'd say, what am I getting from these other people for twice or three times the fee that I can't get from Vanguard? I don't know the answer to that, but that's where I'd start. All right. So I hope this helps on your search for a corporate trustee if you're setting up trust, because you're going to need a trustee, a co-trustee, and ultimately a successor trustee. The most important person in estate planning is that person. Who is it going to be? All right. Don't forget to subscribe, thumbs up, comments. We'll see you next time at the Heritage Wealth Planning YouTube channel. Thanks now.